Okay, I'd like to welcome you all back. Thank you so much for your patience. I'm absolutely delighted to welcome you to the next part of our Fintech Innovation Summit. This part will allow us to hear directly from 3 successful founders of fintech firms. So during this session, you can expect fantastic knowledge sharing and insights around how these fintech firms have innovated their services and how they remain at the top of their performance and overcome obstacles as they continue to grow. So just as a brief reminder, I would like to ask you all to go ahead and put your questions into the public chat as you think of them. We have a little background noise. Sorry about that. So this session will be moderated by Philip Linhart. So I'll go ahead and I will hand it over to Philip. Thank you, Philip.
Hi, guys. It's really great to have everyone in here. And I'm delighted to be the moderator for this session, which is going to be the FinTech Innovation Panel discussion. We have invited and we have been in touch with a few CEOs from very successful FinTech companies all around the world, namely from Europe and from Asia, as this is also our core areas where we do business with. And we have a really great privilege today to welcome 3 sophisticated entrepreneurs, I would say, successful entrepreneurs, investors, and also investees. And today, the purpose of this FinTech Innovation panel discussion is going to be to ask them, what is it, that they are up to at the moment in the FinTech sphere? Because FinTech is changing from a day to day, from a month to month. And, it's always, I'm always, for example, personally myself, I'm always overwhelmed with the information that I find on the FinTech industry, what's going on, and so on and so forth. So we wanted to curate a little bit of insights from the industry so that you guys can make up your minds what is going to be the next trends, what are going to be the next customer experiences that companies are going to build, what innovation they are focusing on, and maybe you should focus on, and how to become a successful fintech in today's competitive world. So what I'm going to do is I'm going to give the word to Andy Chen, the CEO of Cupitel. Andy, thanks for joining us today. And the same questions as I wanted to ask all of you. Introduce yourself, please, very quickly. Why do you went after the segment of the financial services industry that you went, and what does innovation mean to you?
Thank you, Philip. My name's Andy Chan. I was born and raised in New Zealand. I went to college at Brown University in the United States to study computer science and economics. And I believe that my background is suited for fintech innovation, as I am both a software engineer and I've also worked in the financial services sector. And so for me, I chose this space because I see a lot of friends and family starting SMEs, and then really the bottleneck for growth and also the headache keeping them up at night is working capital. So I saw in the West, in the UK and the US, there were trade finance platforms for SMEs that enables them to do business and link them up with professional investors like hedge funds, private credit funds, family offices, ultra high net worth individuals who can help support their growth. And so in 2016, I met my co-founder, Winston, through playing basketball. So my passions include basketball, esports, and hip hop. And so I met my co-founder. He works in trade finance, and then he's studied computer engineering at Hong Kong University of Science and Technology. So he has a background in coding as well. And so we are able to build a platform in about 8 months and launch in August of 2016. And then we've raised our Series Seed in 2017 from Mindwidth Capital and Alibaba. And then in 2019, we raised from Credit Ease, a Beijing fintech conglomerate, one of the first to list in New York. And then we just raised our Series B $150 million US round led by the Greater Bay Area Homeland Investments company. And so it's very exciting to be here. Innovation to me means being an economic scientist or a business scientist and really exploring the market, testing your hypotheses, and coming up with something that is unique research and a unique product market fit. Thank you.
Perfect. Thanks a lot, Andy. And so what are we going to do right now is I wanted to give all of the speakers some place to introduce themselves, but given that we have some technicalities over there, I'll start with the first question on you, and then I'll move for the other speakers, and so on and so forth. So the first question that I have on you, Andy, is, as the world becomes more digital and there is a massive amount of data available that's generated basically every day, there is, some term which is called like data overwhelming, and a lot of companies are struggling with that. A lot of companies are trying to make sense of the data. What I have seen is that you are also a successful company in terms of the data management, and in terms of the getting insights in order to make a better lending decisions, for example. So I want to understand, like, what does technology, innovation, and data mean to your business, and how does it actually help making better lending decisions?
Thank you, Philip. Before our Series B, our slogan was Cupital, quick quality capital. But now we're not about that. We're about quantitative capital. So, our new T-shirts, our new pens, our merchandise will be saying Cupital quantitative capital. And what that means is everything that we do is data-driven, digitalized data-driven lending. So, we can lend against anything that is digitalized data. So even to consumers, to businesses, as long as we have data of their transactions, of their refunds, of their order cancellations, etc., we can build an underwriting model around that. And we really believe that that is the future of underwriting, where machines take a lot of the workload away from your analyst, and then they can focus on more high-level thinking. And then the machines can do the grinding and the number crunching. And with our big data storage, we have over 2 billion transaction records of e-commerce merchants in our big data lake already. So of course, we need the talent in our team. Being based in Hong Kong is very advantageous. There's a lot of top-tier universities here with graduates that come from statistical backgrounds, computer science backgrounds, mathematic backgrounds, that are able to help us build these models and help us work with these large data sets. So yes, quantitative capital, data-driven financing, that's us, and we believe that's the vision forward for the future for lending.
Okay, that's perfect. I have also another question following up on this. Basically, I have read some article that according to McKinsey, the digital finance marketplaces are expected to account for about 60% of the digital commerce volume in the next few years. And you mentioned that you have recently closed a very, very important investment for you. So really congrats on that. And I would like to understand, what is your plan, and where do you see these growth opportunities, given that the digital e-commerce space is going to grow no matter what, and there's going to be a lot of players coming in, and how do you think that you can help basically in that e-commerce financing segment with Cupital?
So right now we're serving Amazon, Lazada, Shopee, eBay, and Wish, and then now we're going to expand to more platforms like Walmart Marketplace, Rakuten, AliExpress, Shopify, etc. So that's the one strategy, is to increase the number of platforms, and the second strategy is a geographic expansion. So we're in Shanghai, Shenzhen, Guangzhou, Hangzhou, and Fuzhou in Hong Kong, and then we'll look to in China. About 60% of Amazon's merchants come from China, so we want to expand to Beijing, Qingdao, and Chengdu. And then in the West, we'll look to cities like London, New York, Los Angeles, San Francisco, where there are a lot of e-commerce brands and activity in the space. And then in the east, cities like Tokyo, Singapore. These are other cities that we'll look to consider for our next step of expansion.
Wow, that sounds exciting. But there's a lot of cities. So do you guys have any priorities to start with? Are you going to go with the Chinese market first and then move on with the Western world, or is it going to be a parallel strategy?
Yeah, I think London and New York would probably be a parallel strategy, and then Beijing is already in the works even before the Series B. So we're definitely going to Beijing.
Okay, perfect. So thanks a lot for the initial set of questions. There might be something coming out from the audience, or we have some other questions to cover potentially as well. So let's just go on with the second speaker to start with. And I really thank you for your contribution so far, and please stay online.
Thank you. Let's speak.
Okay, perfect. So our next speaker is going to be Klaus Christensen from Know Your Customer. And we're going to ask him a similar set of questions in terms of, okay, Klaus is online. I can see him right now. Hi, Klaus.
Hi, Philip.
We want to drive the first round of questions and ask you basically if you can introduce yourself, your background, and more specifically, what's Know Your Customer, what are you guys doing, and why you went after the segment of the financial services industry that you are at the moment.
Thanks, Philip. So my name is Klaus Christensen. I'm the CEO and co-founder of Know Your Customer. My personal background is actually computer science. I'm a computer science graduate, and therefore one part of what you need in a startup like this. My co-founder Richard is from the legal side, and the two combined make a perfect set there. We are a global tech company headquartered in Hong Kong and are specialized in client onboarding, KYC, as in our name, and anti-money laundering process digitization. Among the speakers here today, I represent a more recent subsector of the fintech industry, which is regulatory technology, or RegTech. Despite RegTech has only recently been gaining traction as a term, it has been around for quite a long time, and it is actually solutions like ours that make it possible for fintech companies to deliver their exceptional customer experiences. Our specific focus is on the digitization of the KYC and onboarding process of corporate customers in financial services, which is an often overlooked and underserved segment where efficiency gains can be absolutely huge. And that is exactly why I choose this segment. And about innovation, well, innovation to me is about improving outcomes for the end customers and the society as a whole. In our little corner of the universe business, this means using technology to making the currently long and difficult onboarding process a non-event for the user. Simple, digital, fast, no barriers, and accessible for small and young companies just as for the established businesses. And at the same time, allowing regulators to be strict and have effective barriers against criminals. So it's a holistic view of innovation moving everybody forward.
Okay, perfect. Thank you so much for the introduction. I have a first question on you, and it's basically all about the regulations or RegTech, the regulations technology. So my first question is actually about, there has been a recent report from the United Nations saying that the amount of the money laundering that occurs each year is equivalent to as much as 5% of the global GDP. So this is a huge amount of money. And it's a huge problem also for the banks, for the insurance companies, and for anybody who is basically dealing with the financials. So my question to you would be, can you help us to understand like how this RegTech or regulation technology is helping those firms to better understand and manage their risks? Like why do they buy the solutions, and why is the RegTech such an important element in today's banking and financial world?
Yeah, certainly. Thanks. Well, let's take a step back here. What we're currently witnessing, especially in Asia and Europe, is a real revolution and digital transformation of the anti-money laundering compliance functions as we know it. As societies, we have become much more aware of the scope and complexity of money laundering and financial crime practices. We now expect our banks or fintechs to have processes in place to protect the financial systems, and they do. And regulators' requirements also have expanded and grown in sophistication. These factors have resulted in a drastic change in the way AML compliance operates within a business, and how it is perceived by other departments as well. This shift has determined an acceleration in the rise of RegTech. You just need to use technology here. It has also kickstarted a virtuous cycle for the overall sector. In fact, having more automation in place makes it possible for regulators to introduce new and more extensive requirements, which would have been too onerous to handle manually with the old processes. To better understand how agile RegTech is helping firms manage their risks, it might be useful to divide the propositions on the market into 4 distinct segments. I briefly explain each one after I go through them. Broadly speaking, these are AML screening providers, ID verification or KYC for individuals, data sources about corporate entities, and workflow or digital compliance solutions. AML screening providers, the first segment here, are the companies that maintain the databases of bad entities and actors in general by manually integrating sanctions, terrorist financiers lists, political office holders, court judgments against money launderers, and so on. That's a core function of any anti-money laundering system. And the second one was ID verification, IDV, KYC for individuals. These would be the ones that specialized in KYC apps for smartphones. We all have used them. These apps generally allow the end users to scan their photo ID, verify it's not fraudulent, and extract the basic data. Without this type of functionality, non-face-to-face onboarding would be impossible. The third group, and important for our area, is corporate KYC data sources. This can be official company registries, as well as databases of company entity data collected from third-party sources, such as credit scoring, self-reported marketing databases, and so on. Databases of company entities are often used, but actually not all that useful, since companies are so dynamic. By their very nature, they change their structure and controlling parties, directors, and so on frequently. The best available information is when you connect live to company registries globally. This overall area of RegTech is essential to digitize and automate corporate client onboarding. And the fourth and last group was the workflow and digital compliance solutions. These are centralized platforms aimed at digitizing the entire AML and client onboarding process. They present varying levels of automation and customization, and they usually offer integrations with multiple data sources and customer-facing outreach tools. They're able to provide a digital workspace for compliance teams, and that really revolutionizes overall function. At Know Your Customer, we combine all of these 4 groups into one integrated solution. I personally believe that clients in the financial sector need this holistic view rather than try to fit together different individual parts of a solution from different vendors.
Okay, that's really exciting to see like that you are trying to tackle multiple elements of the segments that you have mentioned. and that you also provide something on it in terms of the workspace and the collaboration tools for the compliance tools. So that's really great. I have another question that I would like to cover. I've heard that basically, typically banks employ around 10% of their workforce in the financial crime related activities. So in the KYC, anti-money laundering, and so on. So there are huge departments focusing on the elements that you have mentioned and on what your business has to offer. So what are some of the obstacles when it comes to implementing these innovative solutions, and how do you generally overcome these? And maybe an additional theme on this: is it actually easy to convince the banks to go with your solution, or with outsourcing the RegTech, given how important element of their business it is for them?
Yeah, I'll tackle the last question first here. It's not easy. There are so many obstacles to this, and I'll get to them throughout. But yes, easy it ain't. But that's where the entrepreneurial magic happens. You got to be persistent, you push through, and the larger the opportunity, the larger, obviously, often are the barriers. That 10% is an impressive number, and I would believe it. And yes, we certainly have a lot of experience regarding those obstacles, but also opportunities that arise when partnering with very large financial institutions for that digital transformation. Thinking about it, I'd say that most of the obstacles in this process derive from the huge cultural differences, from the different time horizons, and the different responsibilities generally that exist between financial institutions and RegTech companies. Let me just name a couple. Long-term project thinking in financial institutions compared to the agile, iterative models in tech companies. It's just not a fit. The agile model makes total sense in the fast-changing, customer-centric world, but an institution that is 150-year-old with 10 management level might struggle a bit with that. But that's an area where they should move a lot more. An area where the tech companies need to catch up is in adapting to the responsibilities of the much larger financial institutions. Large number of stakeholders, risks of multi-billion-dollar fines or losses, politically sensitive areas. I'm afraid move fast and break things, that quote, doesn't quite cut it when working with compliance teams and a piece of software that could impact legal responsibilities towards millions of clients or tens of thousands of employees. That's an entirely different size. So that's where tech companies need to adapt their thinking. And last but not least, there might be a generalized fear and a bit of apprehension among the KYC and AML practitioners, the staff in banks, that the machines which we would represent might replace humans and cut their jobs. So the question is, how do you overcome all these? It might sound like a bit of a cliche here, but it all starts with clear and open communications between the teams to find the middle ground that ensures security without hindering innovation. In particular, regarding the 3 points of earlier, I would say release cycles. We've had our experiences with explaining how we work and adapting agile and adapting to slightly longer release cycles. Not everything has to be cut down into 5-day sprints. But this is an area where the financial institutions can easily move more and get more agile when adapting this technology into their own. The second one, when it comes to huge differences in responsibilities, it's best for RegTech firms with little experience to follow the lead of a financial institution and use it as a learning exercise. However, for firms like ourselves with a good few large implementations under our belts, it is possible to leverage this acquired expertise to guide financial institutions toward an alternative path, clearly communicating and demonstrating the reason behind our suggestions. So we now know, sometimes better than financial institutions, how to get this implemented and how to get it approved by the regulators. Working with larger IT providers already in use by the financial institution is a good way of facilitating that, by the way, partnering. And the third one, to address any fears among the compliance staff, it is fundamental to clearly demonstrate how technology can be used to get closer to the customer while making compliance teams' day-to-day work more human. I know that seems a bit counterintuitive. Technology, more human. But hear me out. Regulations are only bound to increase in the next few years, and the compliance function is not going anywhere. However, it would be impossible and extremely inefficient to address more rules manually. But if you use tech, you can free up staff's time from repetitive manual tasks. They can use their critical thinking facilities and their ability to connect the dots and do the real job they were hired to do, protect the business against money laundering and financial crimes. And at the same time, they can even connect to the customers in a more meaningful way, more human way.
So your suggestion is that even within the compliance and the regulatory technology, the teams should be focusing more on their core business rather than following a compliance of a compliance, right? Where they have to do a lot of admin work and a lot of things around. So that's where the industry is basically heading to.
Absolutely. That is what technology does best. It can clear the slate of all these repetitive tasks, of these manual things, and free up your space to do the meaningful things. That's what we want to enable. And RegTech is exactly that.
Perfect. I might have a follow-up question on this, given that we are both in the cloud computing and the AI tech space. So I would like to, for example, when it came to discussing with some of our larger clients in the financial services space, they sometimes come up with the question whether we should do a cloud, whether we should do on-premise, and how do we incorporate that AI that everybody is talking about at the moment in our daily work. So I might have a follow-up question on this is, how far do you think that the adoption of this cloud computing and AI technology in general is? And how do the banks perceive the cloud adoption and AI, though it's a topic that has been here for some time already? Is there any way that we can speed it up, or is there any way that the banks would be more willing to invest in the cloud solutions, or is the change shifting, and so on and so forth?
It certainly is shifting. Absolutely, yeah. The cloud is always, it's very interesting actually. The cloud usage. First of all, our platform is designed cloud first. The solution is built in the cloud. And this is one discussion point we've had again and again with many, and especially the larger financial institutions. But actually, our experience there has been very good. I think it is more a question of timing, and we were lucky in that way that when we started the company 6 years ago, the cloud usage wasn't all that prevalent, and it would have been very difficult to get into larger financial institutions. Now, in our own history, it took us a while to get into large financial institutions where we are now. Fortunately, exactly at the right time, where they all are looking at the cloud. Cloud computing has so many advantages over traditional on-premises systems that the proposition itself is automatically compelling. Scalability amongst them, but also information security. Like, these large cloud providers have military-grade security in place, and it is not that simple to replicate that on premises. But scalability is one of the biggest issues. Obviously, that completely goes away, and that's super helpful for startups in this area. Now, we found that amongst all our clients, we've discussed it a number of times, but we never had to go there. all our clients are fully in the cloud. So that is something that worked out extremely well.
Okay.
AI usage, that's something I always like to take down a notch. Like AI is often seen as this panacea, like it solves everything. Just you don't need to decide anymore. You just give it to a machine. That's not how it works in compliance, I have to say. The humans will still want to and need to decide, but you can use AI very, very efficiently in smaller parts of a solution that do, again, clear the decks of repetitive manual work where the decision is not the overall, shall I deal with this customer, but is this customer a company, or is it an individual, or is this address in which country is it? That sort of AI is very usable everywhere.
Okay. Yeah, I agree with the last point you mentioned, that sometimes it's not all roses, and sometimes we have to go down to the decision trees and understand what's the logic behind it, and all the things around.
Yeah.
So
that said, we use it a lot. Obviously, like in our solution, there's a lot of AI built in. It's just not the overall decision. Do you want to onboard this customer? That's not AI.
Perfect. Yeah. Okay. So Klaus, thanks a lot for your insights so far. I think it was really useful to understand, how you can tackle the bank's challenges and how you can help them to become more agile. So let's. So thanks a lot for that. What we are going to do now is we're gonna give a word to Bertrand, because Aoife and the team was working very hard in order to make it work. So thanks a lot. And Bertrand, do we have you in here? Well, let's try if we can hear you right now.
Yeah, can you hear me now?
Perfect.
No echo?
It's working all well.
Oh, okay, perfect.
Amazing. Thank you so much for joining, and glad that we have resolved the technicalities. So what I want to drive it back is to the content and to the value that you are bringing to the table. So my first question is the general one that I have asked all the other speakers so far is, can you please introduce yourself a little in terms of what you do, what Statris is, and I want to specifically focus in terms of why you went after the segment of the financial services industry that you are doing at the moment.
Okay, so my name is Bertrand. So I've been in Asia for a bit more than 20 years. I started my career as a lawyer, and then I worked for some time in a private equity firm, and then I went for entrepreneurship. The number of company and last venture on which I'm working now is Statris, and Statris is what we call a payment solutions platform. By that, I mean that we provide Asian SMEs with a series of tools that they can use to manage their business more efficiently, all related to payment. So we have a core product, which is a multi-currency business account in Hong Kong, but we also offer payment cards, advanced foreign exchange solution, and also a single currency account in other regions like the EU. And the reason why I decided to move in that space is because, as I mentioned before, I had other companies. I sold some of them, and over years, it became more and more difficult for an entrepreneur to have access to a traditional bank account with a traditional bank. So it's kind of sounds a bit surprising, because on one hand, if you want to do, I would say, small local payments, that's something you can easily do with your phone now. But if you start having a business that is an international business and you do cross-border payment for large amounts, then we come back, to what was discussed with Klaus before. There are compliance issues. What is this money moving around? Is it money laundering, terrorism, and so on? So it becomes, very difficult. And I had a number of problems with other companies that I had a number of accounts that get closed. And so having a legal background, I checked whether it was possible to address this issue, especially in Hong Kong. I realized it was possible to get some kind of a payment license, and I decided to move into that space. I thought there was a good momentum, and we've been in business for 2 years. We have more and more clients, so it looks like, at least so far, that that was a good idea.
Perfect. So the validation stage done, and off to the growth.
Yeah, exactly.
Okay, perfect. So my first question to you would be, with this COVID crisis is having a significant and widespread effect on the global payments across sectors. People are moving money more often than not. In some parts of the world, people are afraid of, or companies might be scared about the inflation and stuff. So there might be a more activity in terms of the payments. Cross-border payments, and so on and so forth. The most striking and potential lasting impact is the accelerating pace of the change in the industry. We also see a lot of newcomers in there, and so on and so forth. So I want to ask you, how do you keep up with the innovation in the payment sector and with Statris? And what do you do in order to build up your competitive advantage in a segment?
Okay, so I mean, to start with COVID-19 and the impact on the payment industry. So I mean, speaking about our own experience, a lot of people are coming to us and say, it's kind of ironic, but say, you get so lucky because you started your business just, at the time COVID-19 pandemic also started. And so as that triggers more and more people, working and using digital solution, that must have been something great for you. By that for Statris. Actually, it's not exactly the way it happened. We launched our business in January 2020, so exactly 1 week before the first COVID-19 wave hit Hong Kong. And at that time, no matter how hard we tried to sell our product, to be under people's radar and say, look, we are some innovative payment platform, that could not work because all other businesses went into survival mode. And typically when they're in survival mode, they were thinking of, okay, what do I do next? How do I reorganize my business? And thinking of adopting Statris for their payment was really, really not their main concern at that point. And for the new businesses, also, a lot of them were delayed because of the pandemic. But what is true is that as times goes by and COVID stay around, business have started to invest again and develop again. And at that time, they realized that we could be a good alternative for a traditional bank. To start with a very simple reason, as people cannot travel to Hong Kong, they cannot visit a branch to open an account, so they had to look for alternative payment solution. And so they turned to us as some other fintechs. So that gives us finally a good momentum. And speaking about the competitive advantage, really, at the moment, the question for us is not so much to attract clients, because, as I mentioned before, a lot of the traditional banks that don't want to open account for, I will say, SMEs, they see that the revenue that they generate with the SMEs is still pretty low, and the compliance risk is pretty high. So we have a good number of companies coming to us. This is also accelerated by COVID. So for us, the key is how do we keep this client? That's where we should, what we should think of if we want to keep a competitive advantage. Otherwise, these clients that will come to us first, they will build a track record with us, showing that they have a legitimate business, and then they can go to a bank. Okay, and I'm sure a lot of them will go to a bank anyway because banks can offer other products. Like letter of credits or things like that. But what we need to do is really to understand what are the needs of our clients, how to answer these needs, so they will stay with us. And I can give you an example. At the moment on our platform, it's possible for client to proceed FX transaction 24/7. So you can do it at midnight, you can do it on Saturday and Sunday during public holidays and so on. So really, for us, it's not like a major revolution. And I would say it would be very difficult to have a major revolution here in the payment industry because it's very regulated. Everything we want to do, any countries in which we want to operate, we need to apply for payment licenses. We need to have a partner bank. So it would be very difficult to say, okay, we are going to reinvent the wheel and do things completely differently. So we have to take that into consideration. But the innovation is really to understand the clients and how we can adjust our products so that any time we can answer their needs.
Mm-hmm. Okay. Yeah, that's really interesting to see where you are going and how keeping the customer is actually more important than getting a new one. And I believe that could be also a topic for itself that maybe we could cover next time when it comes to the retention of the customer and what are all the methods that the companies can take in order to make it. But thanks for mentioning this. I also have a second question coming to you from us. Say commercial customers expect banks and payments partners to enable greater sales by improving end customer experience and the adoption of the new business models. So, for instance, loyalty services. So that has something to do with moving money and managing the cash flow for a particular company. And the loyalty element could be an interesting one that a lot of banks are, for example, at the moment either thinking about of reinventing or re-implementing and so on and so forth. So my question to you would be, what's going to be your next focus when it comes to the innovating your customer experience and also the technology? I know that we have discussed briefly in the past about the blockchain. So maybe you can also mention something about that. What's your thought on that, and whether that's going to be the backbone, or whether maybe it is already a backbone of your business model?
Yeah. So I mean, if I start with blockchain, definitely, I think there is a great future for blockchain. I don't think today the product is ready yet for massive adoption. Let me give you an example. We have a lot of our clients that are buying products from China. So there are some kind of import-export trading company buying goods from China and selling the same products in other markets. And as you know, there is a ban on digital currencies in China. So no matter how much I can be a builder in cryptocurrency, if we want to address the needs of our clients, we cannot tell them, "Hey, come to Statris. We will execute all payments, using blockchain and some digital currency," because it just doesn't work. Okay. Yeah. So we have to be very realistic with our approach and find the good balance between where innovation will bring us in a couple of years. And I think here blockchain will play a major role. And what are the needs of our customers today so they can operate the business? And that's really something that we have in mind at all time. And something that, to be honest, we've realized, if you had asked me that like 2 years ago when we started the business, this is not something I would have think of immediately, is the importance of customer support. And that's something was mentioned also by Klaus before, saying that when you speak about tech, you speak about automatization and automatization of process and saving time and efforts from our team. But on the other hand, at least in our business, human approach is very important, because at the end of the day, we are dealing with people. And when you deal with people's money, I'm sure you will agree, a very sensitive issue. And what is key, especially when you work with SMEs and entrepreneurs, at any point, they want to know where is their money, if their money is safe and so on. So really for us, what we want to do is find a way to using different technology, and these are not technology that we develop from scratch. We are more like in a mood where we assemble different technology that have proven, that they are efficient, they have a good track record, and how to combine this technology that are provided by third parties to assemble them, provide a very good product to our client, and then free a lot of time for our team to discuss with their client, to explain them how to use our product, to answer the question, and so they are confident that their money is safe and their payment, when executed, will arrive on time.
Yeah, I think that makes sense. Basically, what you have mentioned was that it's not necessary to reinvent the wheel when it comes to the technology, right? Because you can leverage the technology that's already there, make it work, integrate it, and basically that's what's gonna give you more growth than if you would be just inventing things from the bottom up.
Yeah, because either you use the technology to reinvent, an industry, or you can use existing technology or new technology to disrupt an existing industry. And I think that's more what we are doing. If we compare what we do with what traditional banks are doing, whether it's in terms of how we proceed to onboard new clients, or what kind of products that we use under one roof within our platform, that's typically what we are doing. So just maybe to give an example, clients using our platform don't have access to one account only, as it's the case with a traditional bank. You go to a traditional bank, they give you access to one account. What we do is we provide clients with access to one account, the main account being in Hong Kong, but possibly with other accounts in other jurisdiction. But then you have to educate clients on how to use these different accounts, because that's really a new experience for them. And this is where we have to use the right technologies, so their journey with us is as smooth as possible. And at the end of the day, if they have a question, we have a human approach, so they will have a very quick answer to their questions.
Yeah, I think that makes sense. It's actually also one of the topics that I'm going to cover in the next section. It's that whether it's a B2B, it's still a person to person, and it's still a human to human, as you say. So that's a good point that you are mentioning in here. So yeah, with that, I would like to. We have maybe 8 minutes left in terms of this session. So I'm just checking whether there are any questions from the audience, and I see one in here from Dario. So Dario is basically asking about so it was a challenge for the third world entrepreneurs in terms of the project financing. So maybe what we'll do is now I'll dial in with Andy to help us with answering this question. And if there is anything else that is coming, we're gonna get back to you and to Klaus as well. So please, guys, stay tuned on the line, and yeah, let's bring it on with Andy. Yeah, Andy is coming in. Okay, Andy, can you hear me? Can you see me?
Yes.
Okay,
yes.
Perfect. So we got a question from Dario, and he is basically asking, that the challenge for the third world entrepreneurs, maybe from the developing countries, I would say, is the project financing. Yeah. So in terms of the project financing, I would probably assume that he is asking about maybe getting an investment as a startup, maybe the working capital that you also provide for the e-commerce businesses and so on. And he's saying that things are quite difficult in the third world countries because there is no functioning startup ecosystem. So my question to you would be, how do you in general help maybe an e-commerce business that could be from a third world country, let's say from Cambodia or from Thailand or from, I don't know, Vietnam, and basically helping them to get a line of a trade finance on the way. And that's one question. And the other would be very quick. Do you also provide any kind of ecosystem in terms of the startups when it comes to co-financing opportunities, for example?
So no, we don't work with other startups in terms of co-financing or lending. We do with banks, like for example, Citigroup. But the first question is interesting. Yeah, so the reason we're not expanding to third world countries first is because the market share is not there. The amount of GMV moving through Southeast Asia, is comparable to like a single city in China alone. So we just don't have the resources to be able to scale efficiently right now in Southeast Asia. But companies with a lot of cities with a lot of brands like Singapore, maybe Jakarta would be interesting to set up an office there and see how well our product is received. Yeah, I mean, it's especially difficult for third world merchants to get lending because they're even more underbanked than the developed nations. So banking there really is difficult for SMEs and micro SMEs to get lending, but we make it easier as we have data, and using that data we can underwrite. They don't really need financial statements, things like that. They can really rely on their data, which is proven by third-party platforms like Shopee and Lazada.
Okay, perfect. Maybe a follow-up question on this would be, when it comes to the recent investment for Kupital, what would you recommend to any businesses that are about to hit this similar milestone, that their goal is to raise a new capital and so on? What would you recommend them? Maybe that could also help Dario along the way.
Are you asking for fundraising advice?
Yeah, fundraising advice. Yeah.
Schedule your meetings all in the same week if possible. If not, then in a 2-week period. It's great to have back-to-back meetings and just being able to practice your pitch, practice your story, get better. Of course, have the best investors last and the less attractive investors in the beginning, to give yourself that momentum, and then therefore you can also feed off that energy and have you and your co-founder really drive forward and get everything done quickly. Fundraising is a distraction. You really want to focus on your business. Focus on revenues, focus on sales, focus on your metrics, focus on churn. But it's fundraising is a required part of being a startup, and so I like to have it quick and easy, and don't try to optimize your valuation too much.
Okay, perfect. So thanks a lot for wrapping up this session. I hope that it also answered some of our guests' questions, and I hope that all the questions were interesting to you as an audience, and that you learned something new in here. We might do some follow-ups with the speakers, and we might definitely be so stay tuned for that, and there might be some follow-up sessions, events that we could plan in the future to get in more details in how they can how companies innovate their business, how they change their business models, and how do they change the business models of the customers that they are working for, like the big banks, insurance companies, and so on and so forth. So with that, I'd like to thank all of the speakers, Bertrand from Statris, Andy from Kupital, and Klaus from Know Your Customer for your participation. And if you guys have any questions at the end, feel free to let us know. We can always redirect for better conversations. And you can also connect with the speakers on LinkedIn and so on and so forth. And with that, what I would do is I would like to claim maybe 5 minutes break. We're gonna start around 10:05, which means what 5:05 p.m. Hong Kong time. And yeah, if there is anything else that we need to mention, please feel free to share.
Nope, that's all great. Thank you very much to our speakers. And let's reconvene in 5 minutes for the final installment in our FinTech Innovation Summit event, where Philip is going to take us through a very practical workshop looking at how you can align the sales and the marketing departments so that you can increase your revenues. So we'll meet back in 5 minutes. Thank you very much.